All right, we're about to get real here. So the thing is, when I bought a home back in 2000, I was in my young 20s and I didn't know what questions to ask. And boy, do I wish that there were these YouTube videos that I could rely on to seek out some wisdom and some information. So that's why we're putting this video out today. 4 questions to ask your lender when getting a pre-approval. So before we get started, please like, subscribe, and pound that button for sure, and share this video out to others, because I'm really trying to grow my YouTube channel and I produce videos 3 times a week for mortgage purposes. So 4 questions to ask. Boy, I wish I had these questions, like I was saying, because when I first bought a home, I didn't know what to ask, and I got myself in a real big pickle of a high payment and an adjustable rate mortgage, and I really basically the interest rate went from 6% to 9% on my first payment. Can you believe that? Can you even believe that in this interest rate environment that I would get a loan like that? And this was back in 2000, where the interest rates were about 5 to 6%. So very, very, very disappointing, and I thought I would put this video out so that you don't have to go through what I went through. Question number 1, what type of loan am I getting and why? So, if, for example, you're told that you're going to be put into an FHA loan, you want to know, well, why is that? Why am I getting an FHA loan? And are there other programs and services that I should continue that either you offer or that someone else offers that I'm missing and that I haven't considered? Are there any down payment assistance programs, for example? Are there any low down payment options? If I put more money down, how will that affect my payment and PMI insurance? So what type of loan program am I getting and why? Why are you putting me in this type of loan? Or is there other things that I should consider? Just ask good questions. So that's question number 1. Question number 2, this is going to shock some loan officers when you ask them. What is my debt to income ratio? What is my debt to income ratio? So you want to know 2 things. What your house payment is according to your overall income. So what percentage of your new house payment will be your income as a percentage? And then the second question is, what is my overall debt to income ratio? What is your house payment and the items that are on your credit report divided by your gross monthly income? And you really want that number to be under 43%. Under 43% is the goal, and the lower the better. If you can keep that even under 30%, then you're just going to have a lot better lifestyle. So is it under 43%? Is it under 30%? And your house payment should not be greater than 30% of your income. If you can keep it under 30%, that would be great. Because then what happens if it's 40% of your income or 45%? That's of your gross income. That's your income before any taxes and insurance. So then you become house poor. No, thank you. No, thank you. No, thank you. So debt to income ratios, what is my debt to income ratio given the amount that you pre-approved me for? Because you pre-approved me for $400,000, question number 3, is that payment going to be? So the amount that you pre-approved me for, what is that payment? And if that payment is too high for you, then you want to say, okay, what is it at, let's say you're pre-approved for $400,000. What's the payment at $350,000? What about $300,000? And you want to make sure that it includes both taxes and insurance. Even if you don't plan to make your payment with taxes and insurance and you want to do it separately, you want to know what your total monthly payment obligation is going to be with taxes and with insurance, because there's still utilities and there's items on your credit report. So that is question number 3. Question number 4 is, what are my closing costs going to be, including my prepaid items? What are all my costs that I can expect when buying a house, including my taxes, insurance, and closing costs? And ask them to break that down for you. So that's typically what I do. I'll show you your loan program, how much down payment's required with the coinciding mortgage insurances, like private mortgage insurance, and then what you can expect for out-of-pocket costs, closing costs, interest, taxes, homeowners insurance, and then I'll summarize, add it to your total so that you know exactly what your payment looks like, what your out-of-pocket looks like, and what payment you qualify for, given your preferential. Sometimes I have clients that qualify for a $2,000 payment, but they say the maximum I want my payment is $1,500. So I tell them what will get them a $1,500 payment, and then I might say, well, if you're interested in having a payment of $1,575 or $1,600, this would be the most house you'd want to buy. And if you can find a house that costs this, then your payment would be $1,300. So that's what you want. You want a kind of a scenario, those 4 scenarios, because you do not want to be house poor. You just don't. You want to have a house as a blessing, not a burden. That is for most certain. So for this question and other questions, please reach out to me. This is what I do on my pre-approval process. I spend about an hour and 15 minutes on a Zoom appointment with you, and we go through these things together. So make sure that your loan officer is doing that for you and that you get these 4 very, very, very important questions answered. This is Dawn Connors with Mortgage One, providing you fantastic mortgage solutions. Thanks for watching and for tuning in.